Good morning, everybody. Happy Friday. Let's get a quick audio and video check in. Should be good to go. All right, so let's kick off our morning here in the room. Great to see everybody. Awesome. All right, so I thought I would put together a little schedule for the morning in terms of just, what to expect for the next 2 hours in terms of our live trading room. So every morning we get together for 2 hours from 9:20 to about 11:30, so just over 2 hours. And for the next 20 minutes, we're going to prep for the morning as I sip some coffee. All right, there we go. So we're going to take a look at what hot zones, so scheduled high impact events that have already happened. So what's the aftermath? Today we had none. And then what is to come? What is that hot zone, scheduled, high impact, often macroeconomically important data that's to come? Well, we don't have any data today. We do, however, have FOMC. I don't know how to pronounce his name. I think it's Alberto Musalem. I don't know. But Alberto is a voting member. And I love the St. Louis Fed because they're the ones that put together that great Fred macroeconomic data. It's a really cool site. And if you're a little bit of a macroeconomic geek, spend some time over there on the weekend. It's amazing. I do that probably I'd probably do that every single weekend. It's very cool data that they put together. So big fan of Alberto and his team over there. So we have him coming up at 10:20. Now he's a voting member, right? So what that means is his words probably mean a little bit more than someone who's not a voting member, okay? And ultimately, what we want to remember is the only person who really speaks on behalf of the Federal Reserve is Powell, is the Fed chair. And his job is to get a consensus. His job is to listen to everybody and get everyone to hopefully agree so that when there are rate cuts and when there are rate hikes or a hold, that it's as close to unanimous as possible, because he knows, as do we, that dissenters don't help the cause. We want to see the Federal Reserve in agreement, and his job in many ways is to get that consensus. So over the next 20 minutes, we'll take a look at hot zones. We know the FOMC speak is coming up at 10:20. So if we have a day trade, we've got to think about that, right? We got to think about where we are in the life cycle of that trade. Are we near profit? Are we near getting stopped out? And we might want to, adjust the levels as we go into an event that we know is likely to have some impact intraday on the market. We'll also get into some symbols to watch from 9:20 to 9:40. Now, once it's 9:40, we start our trading day. So we prepared for everything. We've got our intel. And now we're going to start to day trade. Day trading takes a lot of attention. It's 5-minute charts. We might be looking at anywhere from 4 to 6 symbols that look like they're ripe for opportunity. And we might end up in any one of 2 to 4 trades, just in general. So we're talking about getting a 5-minute candle and all the adjustments that come in our indicators every single 5 minutes. So it takes a little bit of concentration, but it's a really good style of trading for traders that even don't want to necessarily day trade. Learn the process, because you'll get a sped up version of the swing trading that I do. So the same thing that I'm looking at day trades with 5-minute candles, you're going to be able to study the way price movement ranges influence our entries. Darvist influences the entries. The wave influences the entries. And then after our break around 10:30, 10:35-ish, we're going to start our swing trading. And at that point, we'll push the 5-minute chart aside and we'll focus on the 1 hour for short-term swings, the daily for long-term swings, and I'll even bring the weekly into view, because we've got XLV, Exxon, XLE, KIE, and a few others that we have our eye on. So we'll also make sure that's at least within view when we start the swing trading side of things. We'll get into the swing trading recap, management of trades, because right now we've got open Google, open RTX, open Schwab, and open I'm looking at the recap right now that I sent out to the members. And by the way, you'll see in the alerts at some point in the day or the next morning if I'm particularly tired at the end of the trading day. But we've got Google, BKR, Schwab, and RTX. Yesterday, I closed out GE because we bought it for 480. I bought it for 485, and many of you were in that same area. It went to 780, almost a $3 winner, $300 per contract. And then it came back down to the level from which we entered, right? That's what we call that break even stop. We'll talk more about that later. So I closed that trade out because I'm not going to let a winner turn into a loser, right? So we're going in with 4 open swings here this morning, and around 9:45, if any of them are starting to get close to stop loss, I'll take a look, but I won't do so before 9:45. Around 10:05, I'll take another quick look, but we won't start our swing trading until after the first hour, or what's known as the initial balance. Because ultimately, what happens is a lot of the opening range volatility is not necessarily indicative of the direction that we're going to get for the rest of the day. So it really, I have found from a probabilistic standpoint, it has always benefited me. Again, I'm thinking, I shouldn't say always, but 80, 90% of the time, I'm always going to be happy that I waited, because how many times do we see sell-offs during the lunchtime doldrums or into the end of the trading day? And so rather than getting in early and sitting through all that noise and maybe for missing out on a better setup, we'll wait that first hour. So whatever might be interesting on swings, kind of jot that down on your notes. Take a look at that list, and when we come back at around 10:30, 10:35, we can dive into that at the best time possible. So a couple things here that are on my mind. Indices are hanging on barely to the PSC, previous session close support. So I'm going to be on the watch for those candles of unusual size, right? Those large candles that are sometimes 2 and 3 times the size of the 5 candles that preceded it. So I look at the range for the last 5-minute candles before the 9:30 candle prints. And ultimately, what we want to remember is that it's perfectly normal to see that high volatility at the open. All right. So what I'll be curious about is, can price stay above that previous session close into, say, 940, 945? I also want to see crude oil stay above 63.82. It's above $64 a barrel right now. So that's good. I want to see that stay up there because we have that open BKR trade, and that's going to help, that trade move higher if crude can move higher. Again, current swing exposure is mostly in communications, energy, financials, and industrials. That's where Google, BKR, Schwab, and RTX sit. So that's our current swing exposure. Notice that we're not all in tech or not all in social sentiment names or nuclear or quantum. We've got it spread out across a couple of sectors. But I will say, when you step back and look at the sectors that we have the most exposure to, 3 out of 4 of those sectors are going to benefit from Dow's strength. So I'd like to see Dow remain above 44,100 because that high tide in the Dow should help financials, industrials, and energy more so than, say, strengthen the NASDAQ. We clearly want that because of the Google position. And I saw this quote yesterday, like the guy or hate the guy, doesn't matter, but I think it's a great quote. It's not whether you are right or wrong, but how much you make when you are right and how much you lose when you are wrong, right? So we talk about, look, on average, I want to win 6, 7 times out of 10. But that win rate is nowhere near as important as average loss and average gain. So let's talk about that. We took a paper cut. Let's say our paper cuts are anywhere from 15 to 25% of premium paid. But then we have our profitable trades. Look, if you look at the GE trade, even with paper cuts, GE was basically getting in at 485 and closing out at 780. That's far better than 25%. So as long as our average wins are larger than our average losses, and ideally we have more wins than losses, it's inevitable. It's just math that we're going to grow an account. All right. I started doing a little bit of a deep dive on Bitcoin, maybe not applicable for the morning, but I'm starting to think that this crypto winter and halving cycle is probably broken. So I've been very curious about that. And likely for long term, we might start to look a little bit at Bitcoin on those weekly charts because I'm looking pretty bullishly at Q3, even though it's pulling back some right now. There might be some interesting opportunities. So that's something that's just on my mind, and I'll cover a lot more of that once we get to one of these issues soon of the top tier outlook. Okay, what I want to see on the bell. Okay, so just a little bit pre-market. I know the bell is wrong, but what I want to see on the bell, ideally, right? Not that we're going to get it, is price remain above that previous session close, that 4 p.m. cash close. I want to see that. Why? Well, I'm especially interested in the Dow moving higher. Why? Because we have that RTX, we have that BKR. And if you take a look at our RTX trade from yesterday, that 15 August 152.5 call, we got in at about I got in at about 235. I think anywhere between about 240, 235 was a really good entry on that. And we're hitting the first target. So as part of that alert that we send out in the room, you already know what that first target is. Optional is always going to have that potential gain of 25%. That's something you can do, or you can wait for 156.30. We're well above that right now, and I'll tell you where those RTX options are trading at the moment. 15 August, 152.5 calls are trading at 475. 475. So that's a nice move for an option that cost 235, right? That's pretty good. That's pretty darn good. So we're definitely looking at that RTX moving higher. If the Dow's moving higher, it also means usually it's going to take financials, industrials, energy, maybe even healthcare with it. So looking at that alignment of index to sector to stock, understanding what that sector is most influenced by is really important. So if Dow's moving higher, it's actually moving higher through 44.2. I don't have a day trade setting up at the moment, so I don't see anything really close to a day trade. So let's keep on with some of this management. And you'll notice that financials are moving up a little bit, which is good. Now, is Schwab participating? It is, right? Schwab is at 96.41. We've got the 92.5 or the 95 calls that were triggered from 95.04. All right. Now, for those of you that are wondering, okay, Rag, 95.04. Let's talk about Schwab because I see some questions in the room. And again, I'm still looking at the day trades. Don't see any yet. So we'll just kind of keep on with our morning intel conversation. Schwab was sent out at 11.04, right? So look at the timestamp on the alert. And I think I went over this in the room as well. Gang, that's when the alert went out. Okay. You can see there, 95.04 is way up here. So did it give us a big window? It did not. It did not. But if the alert gets sent at 11, and let me zoom in a little bit more so you can see it. There's no way to know how long a particular symbol is going to stay either below or at that level. But you can see here's 95.04. From 11.04 to 11.16, we were either below, just above, or revisited that level. Okay. So you can see here, as long as you're getting a fill at or below 95.04, look at the window. So that's not a huge window, right? That's not a huge window, but I wanted to show you all in a 1-minute chart what that looks like, right? Minute by minute. And this was the level that we need to either be at or below. And I wanted to kind of put a thicker line there, but you can see that 95.04 right there. So that's the alert. And then that's all the time that we were below. We went above, came back down for 4 or 5 minutes. And then, we are where we are now. And so that was the window on Schwab for those of you that are looking at that. And yes, sometimes the window is pretty small. Other times that window is fairly large. Sometimes we revisit it, but that's the part of trading we can't predict. All we can do is keep an eye on that level and ideally place an alert. Now, remember, if you place an alert at 95.04 at or below, so you can designate that alert on your platform. Let me show you again how to do that. So it's really helpful. It's to me, for individual retail traders, alerts are your trading partner. They are your bestie. So if I'm looking at, for example, Schwab, I would type in Schwab here, and then I would want it to tell me if we're at or below that 95.04, and it will tell me. Now I tend to like, and I like to put the last or the bid. So this is what I'll set up if I'm looking at Schwab. I know it says Google, but I'm giving you a Schwab example. So what I would recommend is right click the chart, create the alert, have it watch the price of the stock, last or bid, at or below, and then put in the price of the alert. Ideally, let's say we're above price, we want it to come back down. That's where I would tell you, put it at 95.09. But if we're below the alert, right, level, when the alert gets sent out, just buy it. And then if it goes above, buy it on the revisit. And we had both those opportunities yesterday. All right, let's talk about Google a little bit. So a lot of you are wondering, okay, Rod, we've got this great trade on Google open right now. And again, if there's anything on my radar for a potential day trade, it's probably the ES, right? So I'm going to keep an eye on the ES. We've had this pre-market Jarvis sitting at about, let's see, where is it sitting? 63.76 and 3/4. So that had my attention. So we'll see if we get that revisit. We're watching that Jarvis support, maybe for a buy. It's above the previous session close. I do like that one quite a bit. I could probably say we have something similar on the NAS as well. So if we come back down a little bit, we might even use the previous session close level. So I'd be watching the NAS for support around 23.521 and 3/4. 23.5 and 3/4. So I'd be keeping an eye on that one as well. All right. So we'll start scanning, but let's manage some of these open swings. I know a lot of folks are looking for Google. Gang, one of the reasons I've been waiting on Google is I love the trend that we have. We have an uptrend. And how do we know that? Let me grab my drawing tools and show you here. This is the kind of trade where when we have not only an uptrend, but we have bullish momentum as well. Where's my, where are my drawing tools? Hang on. I like to be able to draw on the chart, kind of an homage to the late, great John Madden. Football season's almost here. All right, so let's take a peek. This is what I'm looking at, okay? Bullish, green candles. Now this would be that Momo. So we got in pre-Momo, right? I like to play the pre-momentum. I love momentum, but I want to get in before, right? This is now a new high. What do you think is going to happen on the news today? What do you think is going to happen in any number of chat rooms and discussions? Oh, Google's at a new high, right? What do you think most retail traders do at new highs? They start to come on in. They start to buy at the new high. So I'm going to look for a higher high. Let's get greedy here because we've already taken a profit on Google. I want more, right? More and roar. Funny how they sound the same way. I want more. So we have a 4 and 440 entry on Google. We've already scaled out at 7. I've scaled out at 725. Some of you scaled out close, well above 8 because you waited for that T1. Beautiful. Now what I want to do is get a little bit more greedy, right? I do want to get a little bit more greedy. So this is where the fun can really start to begin. But we'll take a look as we go through the morning at what else we can do with this. I don't want to get too greedy that I miss out on the opportunity of higher highs as we go, but sit through, say, a deep pullback in the wake of that. I'm not seeing signs of that, but we'll talk about this. But having broken that level is a really good harbinger to probably getting up to about 202 or 202.5, which would be a fantastic scale out. Because again, these options cost us right around $400 and change, and letting a trend do its thing, right? Using that strength. Right now, those 190 calls are at 907. So this is a 100%. This is a 100%. So let me mention this. You have, just like with T1, there's a price that I like to see for target one. And there's also an optional, which is a premium gain of 25%. Well, on a T2, there will also be a price, but I'll also give everyone the option of, hey, if you're up 100%, which I imagine everybody would be, you'd have to have a fill above 450 to not be above a 100% gain. That's always going to be a T2 to keep in mind. So just like we have the optional 25% for T1, there is an optional 100% for T2, and we'll send that out a little bit later. All right, so we're going to start our day trading morning. I still don't see much, so I figured I'd spend an extra few minutes on some of that management. We're going to start our day trading morning, and what I'm really looking for is, can maybe crude oil, I'll see if there's USO or UCO liquidity. If not, it's going to be a CL trade. Can crude oil come back to around 63.80? Can the S&P come back down to that Darvis support at that, say, 63.76 and 3/4? Can the NAS come back down to around 23.521? I'd love to see the Dow stay strong, but we've been able to scale out of RTX. Fantastic. So that's one more trade of the 4 that we have open that are now in the plus column and now have stops that are designed to not let a winner turn into a loser. Okay. So we're gonna get on with our morning. We've got our intel out of the way, and let's see what today is going to bring.